What is going on, guys? Welcome into today's video where I will be teaching you how to never pick a bad stock. If you've already had a few bad picks or if you've been trading for a while, today's video will be how to never pick a bad stock again. Let's get right into it. This is it right here. This is all you need to know on how to never pick a bad stock again. Price to earnings ratio, or PE ratios for short, are a stock's price divided by that stock's earnings per share for the year or for the forecasted year if you're looking at a forward PE ratio. I'm going to show you what both are in this video, but this number right here is quite literally all you need to know on how not to pick a bad stock. That's it. It is so easy, and most brokerages out there have the number right there for you. You don't even need to do the math like this, but I'm just showing you what the math is, how you do the math if you wanted to do it on your own. If you want to forecast what the forward PE ratio is going to be, this is it right here. So again, you take the stock's price, divide that by the earnings per share for the year, that gives you your PE ratio. If a stock is trading at $100 and they report $5 earnings per share for that year, you take 100, divide it by 5, that gives you a 20 PE ratio. A quick note to add is that PE ratios correlate directly to multitudes. What I mean by this is a stock trading at a 20 PE ratio is trading at about 20 times what it should be worth. A stock with a 50 PE ratio 50 times, 100 PE ratio 100 times, and so on. But zinc, what number do I want to buy? What number do I want to sell? This is it right here, 30 to 70. If the PE ratio is between 30 to 70, that stock is a good buy. If the forward PE ratio is also between 30 and 70, that stock is still a good buy. That's the video right there. I'll see you guys next time. Have a good one. I'm just kidding. I'm kidding. So what we're looking for here, 30 to 70 range. Mainly you're looking for the forward PE ratio because that is what the stock is projected to do. I could care less if the stock did 200, 300, 400% over the past 5 years. I didn't capitalize on the past 5 years. I want to know what the stock is going to do moving forward. So you're looking for that 30 to 70 range, and this is just a screen grab from Webull. SMCI, PLTR, AMD. These are the three stocks we're going to look at right now. Which ones are shit? Which ones are a good buy? Which ones are a bad buy? You need to get the emotions out that if you like a stock but it has a high PE ratio, you still don't buy it. If you hate a stock, but it has a good PE ratio, you should look into buying it. So SMCI is the first one we're going to look at. And the PE ratio and the forward PE ratio are the ones that were highlighted here in yellow. SMCI is currently trading at $407, $408 a share. Its forward PE ratio, I know it's a little hard to see here, but you might have to zoom in. Its forward PE ratio is 11.88. That might be one of the worst forward PE ratios I've seen for a company. Just for this video's sake, I won't bash them too bad, but that's pretty bad. That means that moving forward, Supermicrocomputer has only traded at 11 times what they should be worth. Usually you want that 30 to 70 range, as I previously stated. Anything less than that, anything over that, the company's either suffering or the company is getting pumped out of its mind, just like Celsius that we talked about last video. 11.88 for SMCI. If you're invested in this, I'm sorry. If you aren't invested in it, let's have a good laugh later. The next one we're going to look at here is PLTR. PLTR popped off today, as you can see here, and I'm going to show how you go about finding the earnings per share in this video as well. Just stay with me here. So PLTR got added to the S&P. They actually got their inclusion date released. It's going to be September 23rd. Wow, the stock's up 13, 14% just about today. But what does that do to their PE ratio? Their PE ratio forward is sitting at 103.4. Is 103.4 within this range? No, it's not. So what do we do here? Do we buy it? Do we sell it? How do I take advantage of this? You do nothing. You sit on your hands and you do nothing. You either wait for PLTR's earnings to catch up to the stock's price, or You wait for the stock price to pull back to the point that the PE ratio is within that 30 to 70 range, and then you buy. Right now, you can't do anything because what's going to happen to PLTR, and you guys can check back on this video, you can check back on my well-being in a couple weeks. PLTR is more than likely going to do the same exact move that Celsius did until either its earnings catch up or the share price comes back down to the point that the earnings is in line with the price of the stock, where it's back within that 30 to 70 region. As of right now, the stock is, it's up nice. It's up 14% today, but it's got a 103 forward PE ratio, and its current PE ratio is at 200, which is way, way too high. And the next one that we're looking at is going to be AMD. I prefer to just look at the forward PE ratio because that tells you what the company is going to do moving forward. Forward action that you can capitalize on. AMD's forward PE is 40. Oh, baby, that's within the 30 to 70. That's a good pick right there. 40.3 PE ratio. Is AMD a quality company? Yes. Is AMD pumped out of its mind? No, it's got a nice 40 PE ratio moving forward. That's it. These numbers are all you need to look at to never buy a bad stock again. That's it. That's all you need to do. If the PE ratio is trading like PLTR right now, absolutely gross. This is not a stock that you want to chase because what's going to happen, again, I'll pull up the Celsius chart just because I hate it so much. What's going to happen is either the earnings is going to catch up to the stock's price and the stock is going to continue up and therefore make itself a growth stock, or the earnings are going to stay consistent just like Celsius did. 27 cents, 17 cents, 28 cents, growing slightly, but nothing compared to the share price. And the stock is going to have a significant pullback, if not go red. So PLTR right now, they're reporting consistently 9 cents earnings per share per quarter. 8 cents, 8 cents, 9 cents, next one, 9 cents. So if the earnings doesn't catch up to the stock's price, we're going to see a very, very similar move to Celsius here. Yes, it might continue going to the point that the PE ratio is 250, 300, 400 even, but the higher it goes, the harder it crashes. This number is so easy for you to grasp. You literally look at one number. Is it between 30 and 70? No? Okay, I don't buy. If it's between 30 and 70, then I'll use the concepts from last video and I'll say, okay, I'll go to the daily chart and what is the fear greed on this stock looking like? What is the RSI on the stock? Okay, RSI on PLTR is also sitting at 70. Greedy. People are buying it for more than what it's worth. I'm also going to sit down on that front. Thank you very much. Now, what about AMD where it was within that range for us to buy? We go to the daily time frame. We pull up RSI, the fear greed of that stock. Okay, AMD's trading at a 42 RSI, and its PE ratio is also sitting at 40. This is a pretty damn good buy right now. It might go a little bit lower, might come down to 30 on the RSI, but this is a much better buying opportunity than when it was at 60. You understand what I'm saying here? So the next thing that we need to look at is how do you go about finding what the forward PE ratio is if you didn't just want to look at what the pre-programmed number is on your device. You come to TradingView, and this is all completely free. You come to TradingView, we're looking at PLTR. You come to the bottom right corner. After you go in the watch list and details, you see the PLTR share price. You scroll down a little bit. You see their earnings, all these little bubbles. Click more info. Go to annual. And then we're looking at the forecast for 2025. So, how do we go about getting PE ratios? We're doing the forward one in this case. So you're looking at the 2025 forecast, the next year's forecast of the PE ratio. In this case, PLTR has an earnings forecast of 0.42 cents per share for the next year. So at the current moment, PLTR is trading at $34.53 a share. So follow along on your calculator if you like. We do 34.53. Divide that number by the 0.42 cents here. So 34.53 divided by 0.42. That gives us a forward PE ratio of 82. That is the next 4 quarters, none that we have currently seen. That's the next 4 quarters of earnings for PLTR, sitting at 82. Is that within the 30 to 70 range? No. This isn't how the forward PE is calculated on Webull and Robinhood and TD and whatever broker you use. They simply use the current quarter as well as the next 3. That's why it's at 100 for the forward on Webull. If you are looking for growth stocks and you're looking for stocks that are expected to grow in the future, you're looking for forecasted growth. If they hit that forecasted growth, the stock is going to grow in share price. You are going to make money. You go to this trading view or through this spot on trading view and you click on these 2025, 2026 estimates. Because again, do we care what the stock did 5, 6, 7 years ago or the past 6 months or the past 8 months? No, because we didn't capitalize on that. Let's take a look at another example. Tesla. How do I know if I want to buy Tesla for the next year, next 2 years, next 3 years? I take Tesla's current share price, 215.65, divide that by $3.18. That's their forecast for next year. 215.65 divided by $3.18. That gives you a PE ratio of 67, and that is just barely within that window, but that validates Tesla being a good buy right now. Simple as that. You don't really need to do these numbers because every broker out there has their PE ratios calculated. You just go and search the ticker. If you're on Webull, if you're on Robinhood, if you're on TD, if you're on E-Trade, no matter what it is, you search the ticker, there will be a PE ratio that pops up somewhere on your screen. You might have to do a little bit of digging, but you will find it. To end the video off, I'm going to take a look at probably one of the worst stock picks in the market at the moment. It's not Celsius. I know, I hate Celsius so much. It's actually Kava. Mediterranean Chipotle bowls. Oh my goodness, the company can't fail. I love it so much. If we take a look at Kava's PE ratio moving forward, Kava is sitting at a 700 PE ratio right now. 700 forward PE ratio. That means that over the next year, they're still going to be trading at 700 times what they should be worth. And the reason being is because Kava is trading at 119 a share. They're reporting about 2 cents earnings per quarter. 6 cents, 2 cents, 21 cents. Next quarter expected to be 10 cents. This stock is purely moving off of psychology, and that's what we covered last video. There is no reason for Kava to be up where it is other than the fact that it's probably getting pumped on some obscure Discord. It's getting pumped in the overall market by individuals with big followings, hedge funds, who knows what's going on here. Everything that we see here, PE ratios, and then we take a look at the fear greed on this stock, it's trading well above greed. It had a 84 spike here with their earnings. They're not reporting anything otherworldly. They're just trading off pure greed. So what's going to happen is you're going to see Kava in about a year, maybe 6 months, 3 quarters, who knows. Kava will have a substantial pullback if their earnings does not catch up with the share price. Based on these estimates, it doesn't look like it's going to. This doesn't mean short it blindly, but this means that this would be a potential stock that you can make an absolute killing on buying puts. 700 PE ratio. It either needs to have a quarter that comes out and reports $1 earnings per share, or it needs to have a quarter that comes out and reports a flat earnings, have the stock come down 20, 30, 40%, and still be trading at a 300 PE ratio. But that's all for today. I'm just showing you guys how not to buy shit stocks. That's it. Simple as that. So, to wrap the entire video up, don't buy stocks with high PE ratios. That's it. Look for 30 to 70, 30 to 70. That's it. That's all you need to know. PE ratio, 30 to 70. Simple as that. So easy. I'll catch you guys next time. Peace.